to the Real P&L Trading Show, where I share my real P&L on 3 accounts and share my proprietary Safe Wheel system for free. All right, let's get started today. I always like to get feedback, make sure that my audio is working. I had some issues the last couple of weeks with that. And make sure that you post any questions that you might have earlier in the broadcast. That way I can get to them before the end of the broadcast. I know we're on a little bit of a delay. So once we're on this delay here, sometimes I don't get to those. Okay, let's talk about, well, let's say first, you guys hear me okay? Make sure that you guys put in the comments here that you can hear me before I move forward, and I will move on with the account that I'm looking at here. You can see my account here. This is the Earnings Edge account. You can see what it's done over this year. Okay, thank you, Mutro and Kevin, that it sounds good. All right, great. I got the audio working nice. So for the Earnings Edge, what happened last week? Last week, I traded JPM, and it was interesting. On Thursday, I was up around $700, but then I wanted to wait till Friday, maybe get a little more out of it, and then I ended up breaking even, or down $30. So let's take a look at the spreadsheet. JPM down $30. You can see with the Earnings Edge, I've got 30 wins, 20 since my update. I've got 30 wins, 20 losses, and 9 break evens. I had another break even last week. And let's see what my P&L is. 97.63, so just broke under that 10,000 mark. I've been above it often, which means I doubled my account at some point. But right now, I'm at 97.63. 97.63. Let's put that in here. 97.63. Okay, it's already in there. What is SPY trading for? SPY is trading for 571.76. Not much of a move from last week, I think, here. Okay, so if we look at the Earnings Edge, you can see in 2022, vastly outperformed the S&P. Then it underperformed the S&P in 23, now underperforming in 24, but still overall 95% return versus the S&P since 2022, about 20% return. So yeah, if you went and bought the S&P 500 at the beginning of 2022, you'd be up 20% over 3 years. So what is that, about 7% a year? If you were in the Earnings Edge, or with the way I traded the Earnings Edge, up 95%. All right, let's talk now, get into the Premier Level 5. I need to log into that account, and it's going to send me a notification. I use Interactive Brokers for this particular variant. When I have, I have around $30,000 or a little more in that account, and when I use such a lower amount, when I use ES, it uses a lot of buying power. Oh, now it's asking me things to log in, verifying me. Okay, continue to decline. World here. Okay, so should be good now. Here it is, my account for IB. Let me refresh it. I can't show you the whole thing because then it'll show my account number, which I try to avoid sharing that. 31,209 is the balance. 31,209. 31,209. Okay, and the S&P SPY is at 571.76. I'm using SPY as my comparison. This is the PL5 Pro S&P 500 variant, so it's a little different than the regular PL5 Pro. And starting on July 16th, so I'm coming up on 3 months. The PL5 Pro is up 4%, and the S&P 500 up 1.51. So outperforming by around 2.5%, which is what I expect. I'm not going to, crazily, outperform the S&P with this variant, but I should, and I am, outperforming the S&P with this variant. This variant ties a little closer to the S&P 500 as opposed to the PL5 Pro by itself. Okay, so that's the PL5 Pro S&P variant, outperforming the S&P as expected. And I have about 1/3 to 1/2 the drawdowns with that. Well, with this variant, I'm going to have the drawdowns of the S&P 500 a little bit, even maybe a little bit more drawdowns than the S&P 500 with this variant. Now with the safe wheel, let's talk about the safe wheel. What am I doing with that? I have an account that has the safe wheel on it. Let's get to that account. Should be this one. $6,040. Let's put that in the spreadsheet. See how that is comparing to the S&P 6,040. That's just almost exactly what it was last week. Down about 6%, which is probably the largest drawdown that I've seen with the safe wheel. And you can see how it vastly outperformed in 2022 in that grind down market. You can see 2023 in the up market, and now 2024. You can see right here we're pretty even with the S&P 500, but again, my drawdowns are about half, maybe 1/3, but about half of the S&P. So on a risk-adjusted basis, I'm outperforming with the safe wheel. It's a lot safer than just being in the S&P 500. And you can see what I've done so far and what I've traded this year. Let's go to, what am I going to do now? So I'm going to trade this live right in front of you here. This here, I have a put hedge here. I have a long call to protect my put hedge. And I don't have any shares. So I want to manage this put hedge first. So first thing I do is I ask myself if I have 200 shares and whether I can cash this thing in for a profit. Well, I don't have 200 shares, so the answer is no. Then I ask myself, is it under 100 days? Because if it is, it's depreciating too fast. I don't want fast depreciation. The answer is no. Then I ask myself, is this strike price within 70% of the actual price of the underlying? So with that, I need to do a calculation. So I take the 24 divided by 33.16, and it's 72%. So if this was under 70, I would say, hey, I've got to move this strike because it's not close enough to protect me. So I'm going to move it, but I don't need to move it because it's within 70%. And when I start it up, it's within 80%. But it's obviously the stock has moved higher away from my long put here, but it's not far enough away to where I need to chase it or move this long put up. I have my long call. This is protecting this put. I buy these on Friday. I usually spend about $5 on those. So I always like to say ABC, always be collecting. That's what the safe wheel is. We're always collecting. I'm always collecting premium with the safe wheel. So what do I need to do now? I'm going to collect some premium. Now that my hedges are in place, I'm going to go ahead and place and sell a put. I like to use the nearest expiration because that is the juiciest ones that I can get. So let's see what I can do here as far as selling some premium. So I'm going to run the traditional wheel at this point. I'm going to sell a put out of the money. So out of the money would be $33. I want to get at least 33 cents. See this one right here, 32.50. I can't get 33 cents or more, but I can get this. I can get, if I sell the 33 put, I can get probably 42 cents here. So I'm going to go ahead and do that now. I'm going to do, if I have between $5,000 and $10,000, which I do, I'm going to run one wheel contract and 3 put hedges. So when I sell this here, I'm going to sell it. I'm going to sell one. That's how I do the sizing. Look at that. The mid price is 41.42. Let's see. So I might be able to get $42. Always be collecting. And that filled. Good. So filled order here. Now I am in my traditional wheel, also with my hedges. So it's called the safe wheel, of course. So I've collected my premium. I sold the 33 put. I could get assigned at 33, or I could keep this $42 here. Okay, let's see if there are any questions about what I'm doing here or anywhere else, or options in general. Oh, also, I wanted to talk about this. My new book. My new book is out. I just got this thing out about a couple weeks ago. It took me a long time to get this book written and done. I've worked really hard on this book. It really gives away a lot of information. It's specifically geared at the PL5 Pro, and it really gives a lot of information out on the PL5 Pro. In fact, practically gives it away. Gives away the trade structure. I mean, it's a really good book. It's basically kind of like my trading philosophy, my trading life in one book. I highly recommend that you get it. Okay, let's get to some. Oh, Shovel was first and Avery was second. Nice. Sounds good. Thanks for your for letting me know that my audio is working. Kevin, good morning. Steve-O says there's a bit of an echo. Yeah, I switched my audio, my microphone to a little lower quality microphone. You can see I don't have the other microphone here because I kept having too many problems with it. Let's see, Janos. For the Earnings Edge, even if it's a margin account, we need at least 10K to start because the large cap stocks right now. No, with the Earnings Edge, you can trade it with as little as probably get away with probably about $2,000 or $3,000 if you needed to. I recommend 5,000 because there's occasionally might be a trade that you want to take that you might not be able to get, but if you have 5,000, you're usually pretty safe with the trade. So that's what I started with. I started with 5,000, and my account's nearly $10,000 right now. So I would recommend that, but if you only have two or maybe 3,000, you could still get away with that. All right. Metro says thank you. Have a great week. You are welcome, and I appreciate you guys. Okay, well, I don't see any more questions here, so don't forget. Avery says don't forget to hit the like button. That would help out tremendously. It'll help other people get to this, and what's important about that is I'm sharing my P&L, right? Here's my P&L, here's my net liquidation value. That's important. There's a lot of instructors out there, and almost none of them share their net lick, so you really don't know what their performance is, and you're learning from somebody that might not have the performance that you think they do because they don't share their portfolio P&L on a consistent basis. So that's important. So if you hit the like button, it'll help tremendously to spread the word and get other instructors out there to share their P&L. That's one of my goals with my channel, is to get those guys to share their P&L. And you guys can help with that too if you hit that like button. Okay, I'm going to go ahead and head out. I appreciate you guys, and in parting, I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week.